Financial Inclusion Conclave presented by Jana Small Finance Bank, partnered by Times Network on the occasion of the bank's 4th Jana Diwas, brought together policymakers and industry stalwarts on a single platform to deliberate the national vision of empowering India through financial inclusion.
Financial inclusion is a very important part of what we wish to achieve. But really giving financial independence is a real goal, where people not only can make progress, but can also have happy living. Important thing about Jana Diwas was to celebrate customer stories, because I think that truly inspires all of us to really work harder every single day. In the financial inclusion space, you really need to have a different kind of effort, and I must say hard work, a different passion or an ethos to really serve this space. It's really 1 billion people globally which need financial inclusion. So they're at the bottom end of the pyramid. Poverty line is an issue. 200 million people are in India. But I think that's one part of the problem. The real issue is there are people who are not in that bucket, but are really underserved. 95% of India makes less than 5 lakh rupees a year. So fundamentally, at less than 5 lakh rupees a year, it becomes a very large base for us to service. But they need the education, they need the connect, and they need the products which suit them. And we have to be there for them all the time with an economics which really makes sense for them. That's the real big piece which is very important to understand, that why is financial inclusion and financial independence core. I mean, India has one very, very bright story, which has been the Jan Dhan accounts. Nearly about 35 crore accounts have been opened. Now, it's not about the balance and the dormancy. It's about giving that right, giving the openness to customers, bringing them to light that there is a possibility that they should really expect more from banking, I think has really been a stellar. So Jan Dhan, by all measures, is something the rest of the world can easily copy from and learn from. So here is a next step after that, which is it has to go beyond opening an account into financial literacy, and the biggest challenge is credit. Roughly less than 10% of the bottom of the pyramid have access to credit. Here lies both the problem, but I think a massive opportunity, and that's what Jana is really focused on. 93% of India's population works in the unorganized sector. This is that unorganized sector where your small business actually employs people after you start making it work. So what we need to really do for the 5 trillion economy is to start these small businesses which employ 1 people, 2 people, 3 people, make sure that credit is available to them, and that drives a huge force which creates employment. And of course, with employment, you will follow it by consumption.
We firmly believe that India is rising and you can also rise. And the best way to rise is to participate. Some may call it passion, some may call it purpose, I call it obsession. Our obsession at ET Now is to make your life better. And the best way to make your life better is to tell you how can you keep the faith and how can you believe in India.
The evening was graced by the Chief Economic Advisor to the Government of India, Krishnamurthy Subramanian, who has championed a sustainable approach to financial inclusion across India.
Financial inclusion is something that I actually, passionate about, because both the personal and the professional come together for me whenever I, think about or talk about financial inclusion. Experiences over the last many years actually have provided me the opportunity to sort of see financial inclusion, in action on the ground. And I've been very warmed by the real impact that financial inclusion has on the lives of people. Among the various factors of production, finance is certainly one of the key aspects, and therefore financial inclusion, has to play a critical role if we have to achieve that $5 trillion goal. We are a population of about 1.2 billion. So if we include all the banks together, we'll find it hard to get to 1,000 for a population of 1.2 billion. The United States has 1/3 our population, about 400 million, and has about 25,000 banks. I think that gives you a sense of where we really need to sort of move in bringing finance to the common person. We need market-oriented solutions for financial inclusion to happen. When I teach students, whenever we look at inference from data, I actually ask them to make a distinction between 3 A's, which is anecdotes, aggregates, and averages. Bad thinking relies on anecdotes, while good thinking relies on aggregates and averages. And that is where I think it's really important to sort of recognize that on average, the private sector is more efficient than the public sector. Averages and aggregates have their limitations. The Jandhan, is an anecdote that really needs to be talked about, which says that yes, the public sector can also do very good, but on average, it tends to be that the market does a better job of actually delivering some of these outcomes, which is something that we need to recognize. What is critical, and having been someone who's studied both banking and governance very, very carefully, what I must emphasize is that overall, the private sector does a very good job in delivering, outcomes and having impact when the governance actually is gotten right. Governance really is about thinking about the long run versus focusing, on the short run and becoming myopic, because there's, enough evidence that shows both in the financial sector and the real sector that the cost of capital, be it the cost of debt, be it cost of equity, is lower for firms that are actually well governed. If you look at from a bank's perspective, the most important decision that the bank makes is a credit decision, whether to actually give or not give a loan. In a small finance bank, especially in the context today, I think the judicious mix of both the soft information and the hard information is extremely critical, because that loan officer who interacts at the local level speaks the local language, understands the local culture, and therefore, and possibly also knows everybody by name and also understands how the business is doing. He or she has that critical soft information, which is very, very important. But that soft information by very nature is not scalable. Economies of scale cannot be achieved with soft information, because by its nature, it is something that has to be done at the individual level. The cost of acquiring that information is something that is quite large. It is important, very important. But what you need to complement that with is hard information, which is where the significant advances that have happened in technology, AI, machine learning, etc., taking unstructured data and converting them into a structured format, even sort of data mining, machine learning, all those become really critical, because what you can do is you can now aggregate. That becomes really critical. Given the kind of, advances that have happened today, there is, enormous ability to not only capture the ability to pay off a borrower, but even the willingness to pay as well. What is it that really motivates that small borrower to really be so steadfast, in repayment? It actually is something relating to, it's not just economics, and that's where the behavioral economics comes in. Most small borrowers basically think about debt as, not just an economic obligation, but a moral obligation that they have to repay. And when the credit culture is good, the cost of capital goes down significantly, because the presence of even a few bad apples in the, in the borrowing group, what it does, it increases the cost of capital for everybody. I would once again like to really thank the organizers for having me here, and would want to wish all the customers and the employees who are being recognized today my heartiest congratulations, and wish Jana the best of luck for not only the next few decades, but for the next few centuries, so that you can really make a huge impact on the lives of people. Thank you very much.
The evening saw the celebration of the financial independence of 3 extraordinary women who've turned adversity into opportunity to become economically self-sufficient, chosen from among 35 lakh Jana Small Finance Bank customers by a distinguished jury and those who helped them get there.
में मेरे बच्चे जुड़ा हुए थे। लड़की तो ठीक थी, लेकिन लड़का बहुत कमज़ोर था। तो डॉक्टर्स ने उसे डिलीवरी होते ही प्राइवेट हॉस्पिटल में भेज दिया गया। तो हमें वहाँ पर 1 महीने तक रहना पड़ा। और मेरे हस्बैंड हमारे साथ रहते थे, तो उनका काम भी छूट चुका था। हॉस्पिटल का बिल था वो चुकाना था, कहाँ से करें, टेंशन थी, बच्चा बीमार था और कैसे करें, ये सब सोच के बहुत टेंशन होती थी कि कैसे करेंगे कैसे। तो इसके लिए दुकान करने की सोची। इसके लिए हम जना बैंक के साथ जुड़े और हमने थोड़ा थोड़ा काम करके अपना शुरू किया। फिर हमने दोबारा लोन लिया, जो थोड़े उसको और सामान को बढ़ाया, फिर अच्छा जनरल स्टोर बन गया हमारा। और ऐसे कि हम थोड़ा थोड़ा सामान बढ़ाते चले गए और फिर उसके बाद जिसका हमें देना था थोड़ा थोड़ा करके हम वो वापस किया।
लोन की जानकारी मुझे एक दो औरतों से सुनाई दी कि ग्रुप बनाओ, 4-5 जनों का ग्रुप करके ग्रुप लोन लिया पहला 20-20 हज़ार का। उससे मैंने टिफ़िन का बिज़नेस चालू किया, 4 जन करते थे। फिर मैं 1 साल के बाद वो फिर गया, फिर दूसरा लिया मैंने, 4 के 8 टिफ़िन के हो गए। ऐसा करके थोड़ा बढ़ गया टिफ़िन का, और पढ़ाई में बच्चों का भी देना पड़ता है। अभी घर का अच्छा है, चलता है अभी।
Working with Jana led to my professional growth as well as personal growth, and obviously I see myself as an asset of the Jana. If I work hard, I will definitely going to have growth.
हौसला एक बार टूटा था जब हम इंटरव्यू देने के लिए रांची आए थे, तो इंटरव्यू नहीं हुआ और उसके बाद फिर दोबारा बुलाया गया कि दोबारा आइए आप। तो हम लोग कहा कि नहीं होगा, जॉब दोबारा बुलाया जा रहा है। लेकिन दोबारा जब आए तो सिलेक्शन हो गया और फिर माइक्रो फाइनेंस ज्वाइन किए थे।
जाना स्मॉल फाइनेंस बैंक का धन्यवाद बोलना चाहूँगा मैं, जो कि आज इस स्टेज पे आके मैं खड़ा हुआ।
Coming up after the break, the Chief Economic Advisor speaks to us about the government's vision to achieve complete financial inclusion in India. With the government on a national mission to achieve complete financial inclusion in India, the public and private sectors play a pivotal role in achieving this purpose. The Chief Economic Advisor to the Government of India and the MD and CEO of Jana Small Finance Bank speak to ET Now's Managing Editor, Nikunj Dalmia.
I have to ask the obvious. We are no longer using the word boom, we are using the word gloom. How much of the current environment is largely driven down because of sentiment? How much of the word slowdown is structural, and how much of that is cyclical?
You know, we tend to, in India oftentimes sort of oscillate between irrational exuberance and excessive pessimism. And therefore it is the duty of someone like me to try and provide the perspective that the truth is somewhere in between. I feel that we took our eye off the ball on structural reforms required for growth, into around starting 2004. I must, in this context, mention that, government in the next 5 years is clearly focused on economic growth. Last 5 years, we've put in some of the important, reforms. I would specifically mention about the bankruptcy code. Clearly, starting around 2008, 2014, there was excessive leverage that was built up. Other aspects which I don't reflected in the corporate balance sheets, reflected in the banks' balance sheets as well, and that if the ramp up, and some of the sort of the difficulties that were created at that time, if that happened over a 7-8 year period, to expect that unwinding of that will happen like this, I think one is not being very realistic. Some of the habits that we may have gotten into is something that we have to get out of. Habits matter not only for an individual, but also for an economy, and we need to move into, sort of more salutary habits, and that is really critical. So that's what I would emphasize on.
In order to reach the $5 trillion economy, we need a vibrant financial sector. We have a very large financial audience here, so I'm going to talk about the reforms which the government is thinking or may do for the financial sector. One side, you've got disruption, which is coming because of technology. Then you've got competition and productivity, which is coming from the private sector. What role do you think PSU banks will play? How committed is the government in order to reform and recapitalize the entire PSU banking sector?
There was an important change that happened from 2014 onwards, which is that the commercial decisions that the banks basically had to make, it was left to them. Nowhere in the world do commercial banks go and lend to infrastructure. And there are two very good reasons why that doesn't happen. One, it creates a huge asset liability mismatch. Second, the ability to judge a good project, infrastructure project, something that is really long gestation, that is very specialized expertise, and banks do not basically specialize in that. Whenever we look at, across the world, any crisis that we've seen, be it the Asian financial crisis, the global financial crisis, eventually when the verdict comes out, there is actually a huge element of governance in it. We do need more catering of banks to to basically the credit needs of the country. Emphasis on use of technology, that is really critical, needs to happen across the board. And our banks, rather than get disrupted, they really need to sort of take that on board and run with it.
Ajay, in your case, you've been hitting the ground running. How would you, from your eyes, since you are dealing with the down the pyramid borrowers, how would you paint the current economic picture?
Right now, we are not at that moment where we are worried about work for the electrician or the plumber or the maid or the driver. We are absolutely nowhere close to that. So I think in the segment that we see actually the same amount of requirement for credit. There's enough amount of entrepreneurship available. And we don't see the pain or the pinch as yet. I think where we can see a bit of stress is in the smaller micro enterprises and mainly in the metro cities. One of the classical ways that we address an issue in Jana is when it's a small problem, we call it a crisis. When it's a crisis, we call it a tsunami, and we address it as such. So then the chance of something not getting addressed is minimalistic. So I think it's nice that we are really getting panicky about where we are, which is in a way good, because I think we'll over-address the issue, and it'll probably help as we go along.
The world around us has suddenly become very dynamic. We are looking at a trade war. That means the way world would do business would be different. How exactly do you think India is getting prepared to face the new normal, both in terms of productivity, in terms of skilling, in terms of tooling, and also creating jobs which can really compete with the AI and IoT tools now?
I think an important fact that we must keep in mind that overall, if you look at India's share in world trade, it's actually 2%, which means that even in a world where basically the trade pie, let's say, is shrinking, we can increase that slice significantly and yet grow. If we go to a 10% of that pie, we'll be significant. So rather than worrying about basically the shrinking pie, let's focus on having a bigger part of that pie. We should be looking at particular sectors and making strategical strikes. And that's where productivity becomes really critical. Productivity really gets enhanced when you have scale. If you have to basically be productive, you have to export, you have to be productive. Why? Because any consumer, if you think about any one of us, we buy an imported good only if we get a good basically at a lower price for the same quality, or we get a higher quality for the same price. Same psyche prevails for actually the for the consumer worldwide as well, and that is all about productivity. So we need to be focusing on first the increasing our share. How will that increase in share come about? We have to really double down on increasing productivity, and that's where we have to focus on letting our MSMEs actually grow and sort of remove some of these perverse incentives for them to remain small and thereby unproductive, and thereby not very capable to go and compete in the export markets.
See, one of the things that clearly we realize is, and in our business, that urbanization has an advantage. So a lot of folks will move to the urban location. There'll be jobs, and there'll be work. But frankly, 1.2 billion can't be the answer. Banks like ours will reach out deep, rural, create opportunities for people to borrow from us, to create small businesses, to create employment, and then grow. Really, as we go deeper, one of the big challenges banks would have is, breaking even in a branch takes about 2 years, 3 years. You're really servicing a part of society which is not normally easy to service, and we haven't done that in the past. Would the government think of something more deeper to do with banks like ours? When I mean like small finance banks, which will really go deep hinterland, and with some amount of support from the government, really make a difference to societies that are there. And there is enough opportunity. I mean, we work, for example, in dairy farming. I mean, just productivity that you can produce there. I mean, the productivity that you do in the agribusiness. The amount of education you can spread where people can really use it even for a very distributed data entry operation. So there is a lot of opportunities. It's just that how do you create a platform where you encourage the private sector to really go deep down? Because there is an answer there.
Let me be, I'm not for even a moment, dismissing what you're saying on, I think financial inclusion is very, very critical, is important. But this message of basically private sector cannot have a situation of private profits and socialized losses. I think that needs to basically move on. We need to move on. We are a market economy. In a market economy, assets do get reallocated when somebody doesn't, let's say, manage the asset very well. Reallocation needs to happen. There are sectors that basically go through sunrise and then have a sunset. And sunset sectors, basically, there are, reallocation happens. These are important aspects. So the private sector also needs to recognize that, the mindset needs to change. World over, sunrise sectors are sectors that actually can, can become subjects for support. I mentioned, I think already, that when, infants should be supported, and one can definitely think about financial inclusion as an industry, as something that possibly, belongs in that category. But again, this is something which needs more thinking. Again, in terms of the sort of the spirit of what I've spoken about, I think financial inclusion is certainly an area that fits that bill, but needs to be thought through. I must mention, we do have, for instance, priority sector lending, right? And the ability for, for institutions like yours to basically go and trade on the, priority sector lending that you do with banks. So there is already some, sort of incentive that is being given. But should more be done? I think maybe the answer is yes. But it's a question that actually needs more careful thought.
The Small Finance Bank is a specific model that has been created to emphasize on financial inclusion. And from what I could see and from all the case studies, certainly they have succeeded to a considerable extent. But then this is a process which has to go on, and it's got to be replicated or followed, not only in one bank but several banks.
Inclusive finance changed their lives. So it's a story of their determination, their never say die spirit. That's the one side of the story. Other side is the hand-holding by the institution.
Seeing is believing. And most people hear about it, acknowledge it, but never really know the depth of it. So I really wanted to bring the customers, the staff, physically in front of everybody, so they could really understand when we say that we are changing lives or we are impacting lives, what do we mean? So I do think that we have achieved some level of success today.